Hi guys, it's Simon here at Chaos Capital Markets. Looking at some trades for Thursday the 22nd of November. So I've got some decent ones and some maybes. So this is the cleanest of them all really in all fairness, which is the Australian 200 index. So at the moment we've got the key weekly level of 5600 plus this upward sloping trend line as well meeting in the middle here, so it's quite nice. This key level of 5600 does go back to 2007. Doesn't go back any further than this chart, so that's it there. RSI is bottoming out near zero at the moment as well, so it's quite nice on a weekly perspective. When we pop down to the daily chart, what we see here again, we've got this little mini double bottom pattern, inside bar there as well, and you got RSI again to zero and bullish, little bit of bullish MACD divergence, which is nice to see in the chart. So that's the overall plan there. The first level I would get, as you can see, is the daily chart. You can see the key level here of 5800 is definitely being tested. There was a little mini level here at the moment of 5666, but kind of it's always been 5600 on the daily chart. As you can see, it's been far key there. So that's what I'm aiming for. That's why I'm taking this trade here. Notice that the first target would be 5800. I don't think we'll go much higher than that, just purely because we are in a bit of a bear trend here, and this would be the 50% Fibonacci pullback. So on the 4-hour chart, to show what we've got there as well very briefly, we've got just a nice little pin bar happening there at the moment. And again, you've got some strong bullish MACD divergence to the upside there, and you can clearly see the double bottom testing 5600. Just come pop that MACD in there for you. There we are. And obviously on the 1-hour chart, then if you look on the 1-hour chart now, what we've had is it's been running down the 1-hour 50 EMA. Little pop to the upside there. Nothing spectacular as such yet. Again, no huge MACD divergence on the last few days now this has been running. So what I'm looking for now really is a pullback to this 5640 area. The reason why you got a touch there, and there, and a touch here. So really myself personally, this is what I'll be looking for. Most likely place an order, I think, because it's quite a nice little trade. Just put your stop below there. That's the lowest it's ever been recently, that is. You can see there it's lower than these and this here. So it's a nice safe stop. And I'd happily get up at 5790. That's what I'm looking for here for a 3% trade. So that's my cleanest one of the day. Just wait for a pullback, place the order, off you go, done. So the next trade I've got on the list is pound yen. Now pound yen's a bit more of a risky one because we have to wait on the intraday for this to happen, which isn't always the best. So I had this inverse head and shoulder pattern in. We've come back down to the key level of 144 again. And you can see in the past on the daily chart, this little bit of zone here has been tested quite a lot. So what I'm waiting for now really is just another test on the lower time frames. You can see RSI is at 0 as well there. Now my test on the lower time frame would be something of this magnitude here. So what I want really now is the price to come back down again to this area here and to start decelerating, putting some reversal candles in and this, that and the other. Maybe with a bit of volume as well to them, just so we know it's rejecting nicely. And my target is 145.4. The reason being is because the 4-hour 50 EMA, it lines up perfectly with the 145.5 area, which has been key in the past as well. So it's just going to get this little gap here. That's all I'm going to get out of that trade. And that'd be a nice little 3% trade there. Now the last trade I've been looking at was dollar CAD. And dollar CAD pretty much, we've been here before, come up to the 1.33 area, nice double top pattern. It has been run out quite a lot, so obviously I'm expecting it to not just drop like a stone straight away. And on this one, I just wanted to prove me a few things here. So this is, like I said, this is the more dodgy one, you could say, the more riskier as such. So the problem here is this 1-hour 50 EMA. For me, I'm going to need to see something a little bit better than that. So we've got 133 key level. If we come back up like in pound yen, we get some better, double top pattern or something around this area here, then yes, I'd like to take that. And obviously then we can look for the trend line here. I'm just going to draw a basic trend line, something like that it would be. Look, not so bad. We can do it on the 4-hour chart and see what we've got. Let's have a look. Yeah, you can see there's a nice trend line there as such. We can draw it like that, we could there. So ideally I'd only take it down to this level of 132, 131.9, sorry. Yeah, 132, that would be quite nice there. That's as far as I take it down to. I won't take it no more than that. If you look at the Fibonacci, the way this has been breathing as well, it's always pulled back to the 618 there. So if we look at the 618 as well, where's 618 leave us? 131, well, 1.32 as well, the 618 is. So personally, that's as far as I go. Now, if you do get a nice bearish signal here, for example, let's say you get your entry here, do you get your 3% trade? Not really. That's the problem you have with this pair. You don't actually get the trade you want. You need a tighter stop, which doesn't really protect you there. It's 31 pip. Well, you have to see how that one goes, where your entry can come out to as such. But yeah, that's what I'll be looking for there. This kind of style of trade. If it pops back up again, see if it comes down then comes back up. It's just tested this trend line again. And that's what I would be concerned about. So that's why it's the last on the list. Now, one I'm going to throw in, which looks good on one time frame but bad on another, and that would be the FTSE 100. So my advice would be to leave this. So I had this marked up here. Looks quite nice. 1 hour chart. Nice breakout of this downward sloping trend line. And it looks like we can rally to the upside. You could actually, in theory, look at this and go, hey, look, we can rally to 73 if you wanted to as such. And you say, hey, look, what a fantastic trade that would be, making that 6%. Your problem with this trade, though, is the daily chart. And let me explain why. This is what I call traps. These are the risky traps. So at the moment, we've got some key levels, 69, 71, and 73. Okay. Now, every time it goes to 69, it always rallies to 73, and then normally it rejects or breaks through. Here it's rejected. Rejection, 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 rejection. Here you've got rejections as well in the past. So and here in the past as well, back in 2015. And there's been other rejections after that. So what you're asking the chart to do is to break out of the 7-1 area after it's rejected. And that would be a concern for me because it hasn't been a clean rally. You see here it was clean, just moved up, no problem. Here it rejected the bottom and then moved up, but here it hasn't done that. It come down, rejected the bottom here, then moved up half-heartedly, and now you've got this daily 50 EMA in the way as well, which has been key in the last 2 trades we've been looking at, and obviously around this area here as well. So for me personally, this is a trap, and I don't like traps. So this would be saying why I'd say the time frames look different here. Okay guys, any questions, give us a shout. If not, happy trading and speak to you soon.